Hello and welcome to Profiles in Risk. And this is your host, Tony Cañas. Today, I have one of my favorite types of episodes, a career episode. And today I have with me Frank Sentner, who often I can say CEO of such and such or something along the lines. Frank does run his own consulting company called Senwood Consulting. But your extensive career in the industry, it really, just the fact that you run the consulting company doesn't do justice to just how long and how interesting this has been. So first of all, thank you for joining me today.
I'm happy to do so. Thank you, Tony.
Awesome. So just before we started recording, I commented on the fact that looking at your LinkedIn, it really is amazing that you were doing insurance automation consulting for independent agents a little bit before I was born. So I was born in December '82, and you have that listed as '82 to '84, and that wasn't even your first role within insurance.
No.
So how did you fall into insurance back in the late '70s and kind of tell us your career story?
Yeah, thank you. Well, I was very fortunate. I was working in group homes as a home parent, and I wasn't making very much money. We had one child and another was planned, and a friend of mine, we had worked together at a school in Vermont, and he kept calling me every year and say, "Do you want to get a real job?" And so one year he called and said, "Do you want to get a real job?" And I said, "Yes." And at the time, he was working for a service bureau. That's a business that would take in paper documents from insurance agents and key them into a computer and spit out statements and aged accounts receivable. It was all accounting at the time. He was my best friend from college. And so he talked to his boss and they decided to open a new territory and they hired me. And I knew nothing about insurance. I knew nothing about accounting, and I knew nothing about computers. But my best friend was the sales manager, so I was hired. I actually loved it. I took all the manuals home and I studied them, and I became an expert on the new system that they were delivering. So they were the distributors on the East Coast for a new system, which was called InsureNet. And it was a system that ran on a, quote, mini computer. That mini computer was the size of a refrigerator freezer. It had 16K of main memory, that's 16K of main memory, and a 10 megabyte disk that was 3 feet across.
So for the younger listeners, which is a lot of our audience, this is super interesting. I happen to be a techie and I happen to be a history nerd, so I'm a little bit familiar. So the only reason that it was called mini is because prior to that, the mainframes were basically, the whole building or the size of a whole room. Yeah. So going from room to refrigerator sized qualified as mini. So this is long before personal computers. Okay.
Yeah. So, I mean, and I had some really good people that worked for the company that taught me about this new system. It had a very advanced operating system and database, a post-relational database before relational databases were even really a broadly available solution. And so he taught me about the inquiry language, which they had actually trademarked, called English. And you could type in an English-like sentence and extract data. And so I became very fascinated with the technology. I learned the system very well. I, did a lot of demos for other salespeople. And one of those salespeople, because they didn't know any better, actually approached Marshall McLennan. And I should say, this system was all designed for insurance agents, right? And it was available as an in-house solution, but smaller agents could share over phone lines. At the time, we were leasing phone lines. This is pre-internet, right? At any rate, we sold together, we sold Marsh & McLennan on the idea of using this platform. And it had recently had a new customer information system, which was based on Accord forms. We basically took the Accord forms, deconstructed them into green screens, and people typed into those screens, and then there was pre-printed form paper in the printers, impact printers, and it would print the data on the forms. People were astonished. So at any rate, the system was bought by my friends at Marsh & McLennan. There were some difficulties when we finally got to the end game for them to sign the contract. However, the senior management from Marsh got involved, and they were at the time insuring IBM. And this system ran on a Honeywell box. This is back when Honeywell made computers. And they canceled the contract because they couldn't roll out a solution that wasn't owned by one of their customers.
And you couldn't like well, maybe today it's all cloud-based, but 10, 15 years ago, if your client gets mad that you're running a Dell system, you can just buy an HP system and like install it, right? But this was custom made for the Honeywell machine.
Well, actually, it's even sadder than that, because this operating system was transportable, and there was somebody who was making a version of an IBM computer that it could run on. But I had been leading around the company by the nose for years now, because we had to really enhance the software to make it work for Marsh. And the CEO just got fed up and said, I'm not porting it. And that was the proximate cause of my leaving the company. So I figured I was smart enough to do my own system at this point. I was really pretty naive. And I went out on my own and started doing consulting. And the agents that I worked with had all different kinds of agency management systems. Most of them were still just doing accounting, but a few of them had created some freeform areas where the agents could type in codes like 100 BI, 50 PD, and that would be interpreted to print on a form $100,000 bodily injury, $50,000 property damage, and so on. And by working with a lot of different agents, it took me 3 or 4 years. I said, sorry. My phone ringing through.
No worries.
At any rate, I'm going to turn it off. So, at any rate, the systems that I was exposed to all had very little policy and claims data in them. And at the same time, so this is the mid 80s, they were introducing the Accord AL3 data standard, which was intended to take data from carriers and download it to agencies. And I used that data standard. It was publicly available. I used that data standard to create a product which is today known as Sagitta. I had a technical partner who wrote a program generator, so I could work on the screen in almost Word-like fashion, and I would create the input screens, and it would also create the underlying data structure, data typing the fields and everything else. And we also had a business partner who was an insurance agent, a commercial insurance agent. And these two guys working with me, we created a system that's called Sagitta, and that is still running. So this is in the late 80s, we started it, still running Marsh & McLennan. So I finally did get Marsh. And BB&T and USI, some of the biggest names in insurance broking today. And most of them have been on that platform for more than 2 decades.
Overly zealous Siri.
Yeah, and Siri is now chiming in on our meeting. Oh, well, I can't seem to turn off my phone.
Don't worry about it.
So at any rate, bottom line, it was well in advance of its time. But even so, 35 years later, it should not be the premier platform for independent agents that Vertafore, because Vertafore came along as soon as we got the company profitable and bought the company, and it was their flagship product. I spent
So the more things change, the more they stay the same.
exactly.
That's interesting. I didn't know Vertafore was buying companies that long ago.
Yeah, well, it was actually called AMS Services at the time, but they changed their name in the late 90s to Vertafore. And so I stayed on as the Chief Technology Officer for AMS Services for 16 months, 5 days, 3 hours. It was miserable. I hated it, okay? And so when I went out on my own in 96, I promised myself that I was never going to have employees again, and I was never going to work for anybody again. I was going to be, an independent consultant. And so for 25 more years, I've worked as an independent consultant. And realistically, only about 20 of those years I've worked as a consultant, because for the last 5 years, at least, I've been focused on working with insurtech startups. I had done a lot of work for corporates, both insurance companies and large brokers. And it was good work. I mean, it paid well, but it was boring. And I happened to get a gig working for Accord, helping them create the first Accord InsurTech Innovation Challenge. And in that process, I met a whole bunch of new entrepreneurs. And I rediscovered my Jones for entrepreneurship and decided I'm going to change my pricing model. I'm not going to charge a fee for consulting, or I'm going to charge equity. And so as a result of that pivot, I am now on the board or advisory board for 9 insurtech startups. I was on the board for 11. 2 of them have not made the cut.
And they're all around the broker space, right?
They are. Well, I should say there are a couple that could be either broker or carrier. One in particular, Global, is more focused on the MGA, MGU space, and also insurance carriers. They're a microservices API-based platform, but carriers are their ultimate end game in terms of marketplace. But the rest of them are various shades of technology for independent agents.
So basically, after spending decades helping independent agencies in their systems side, then the insurtech revolution happened, and you're like, I am perfectly placed, and I have the perfect experience to write my history book on what's happened in that space, and what else would actually work in that space.
It's surprising how often we reinvent the wheel. I've had this experience not just in the insurtech space. I've seen it in the technology space generally, and I hope that there will be a lot more people like myself who are deciding that they're not going to retire. They're going to continue to stay in their industry niche and try to contribute back to people, some of the knowledge that you've acquired, during your career. I really enjoy what I'm doing. I am constantly learning. The new technologies fascinate me, and the number of opportunities for digital enhancement to the independent agency space continue to grow every single day. So I've got a mobile app provider for insureds that works with independent agents. It's a branded version for independent agents. I've got a chatbot, a conversational AI conversational driven chatbot focused on helping producers. I've got a rating vendor, a comparative rating. They would prefer to call it a placement system, a submission system, right? So that one is Tarmica. The conversational AI chatbot is Leo. The mobile app is the Insurance Agent app. The company's actually Blue Eye, the letter I. I've got a terrific customer experience AI platform, Aureus Analytics, and they have two products. One is for independent agents themselves called Donna. She's the all-knowing administrative assistant. And there is a version that aggregates all of the Donna data for insurance carriers who want to provide Donna to their agents, or for network agencies. And Aureus Analytics was the first graduate of the Hartford InsurTech Hub, which I helped write the RFP for, to get Startup Bootcamp to create it here in Hartford. And they've been fantastically successful. And you know, they had to pivot. In India, where they had years of experience providing insurance solutions for customer experience to insurance companies, mostly life companies. When they got over here, they couldn't get traction with the insurance companies, but I was able to help them get traction with the agents. And so they had to actually create their own dashboard to enable the agents to see the results of their, you know, analytics, because the agency management systems are not interested in pushing that data out through their platforms unless they write it themselves. So, you know, and there's a bunch more. My first one was Wave, work at home vintage experts. And that's, you know, mostly retired insurance professionals who are rented back to the insurance industry as, you know, experts. And so, you know, it's been a terrific ride. I have learned a great deal over the last several years about the VC community. I've learned a whole bunch about newer technologies, most of them risk mitigating technologies, not really focused on risk transfer. But my specialty is working from the operational side to enable agents to deal and digitally engage with their customers more effectively.
The idea that we've reinvented the wheel, or that we keep reinventing the wheel, is very interesting. So I'm curious why that happens. Is it because we tend to build a solution in-house for our own use, and we're not as much in the habit of spinning that off to sell to the overall industry, or why does that keep happening?
Well, part of it is I think that people are naturally protectionist about their ideas. I personally am not. Part of it is that our institutions have not done as good a job as they need to of communicating with the emerging technologies. And that was what Accord's effort to do the Innovation Challenge was all about, to link them up with new technologies so they would learn what the new standards needed to be, and also to let the startups know that there's this rich, you know, library of intellectual property that you could use, that you don't have to reinvent the wheel. And it has been pretty successful, not as successful as I'd hoped, but certainly there's a lot of startups who have been able to jumpstart themselves by taking advantage of that intellectual property. Another part of it is, you know, developers like to develop, you know, and most of the insurtechs that I know are led by techies. And, you know, no techie ever met a program written by somebody else that they couldn't write better, faster, cheaper. Okay. And so, you know, I preach to my startups all the time that you need to collaborate, right? You guys are not really competitors. You know, we're all struggling right now. Everybody in the insurance agency space who's selling technology, add-on technology to agents, is struggling because they all need the data that's in those agency management systems. And the people who run the agency management systems are very protectionist. They don't want to let people outside of their four walls have access to this data because they know how valuable it is. And so there are a lot of practices going on that restrain the opportunity for insurtechs to actually reach their true potential, and not coincidentally for independent agents to reap the benefits of those opportunities.
So the sharing data piece is very interesting. I've never worked in an agency, but I've worked adjacent to agencies for a long time, and I've always heard about Vertafore, right? And for a long time, it seemed the impression was that Vertafore doesn't want to interact with anything. They want to build everything themselves. But their newish CEO, last 2 or 3 years, seems like a much more open-minded, much more modern kind of person. And the fact that they just picked up Sydney Rowe from Be Atomic, who then the whole purpose of Be Atomic is sharing data about the agency,
right.
the
Exactly.
another agency, right? So the fact that they picked up Sid makes me think that they've seen the light, and then that they're going to be much more friendly. And there was an interview that maybe a year and a half ago, I think it was already during COVID, that Sid had done on her podcast with the CEO of Vertafore, who has now hired her, and he seemed much more open-minded than what I had always heard about Vertafore before.
I think you may have Vertafore and Applied sort of mixed in here.
Oh, yes,
because Amy is the head of Vertafore, okay, and she's been there since well before the Roper Technologies acquisition.
Oh, so okay.
Taylor Rhodes is the gentleman who's relatively recent, 3 years or so, in the Applied seat. And Sid did that interview, and I heard that interview, and it really piqued my interest, because everything he said was right, okay? And so I do believe that there's a commitment at Applied Systems to open up and begin sharing. And I've had very good conversations with senior management there about their move to Apogee, the Google API platform. Google has an investment, small for Google, but big by Applied Systems, standards. And they're definitely going to be opening up. Now, they're still going to be determining which vendors they want to deal with. And because the management system vendors have always thought they should be all things to agents, right? That means that everybody out there is a competitor. I am hopeful that Vertafore is also coming around. They have the Orange Partner Program. So they have a mechanism in place to evaluate vendors to determine, that they're not a direct competitor, and that they would allow, they would provide for a good handling of the data. Obviously all the management system vendors are very careful about the security of the data once it leaves their data centers. And this is all has to be approved by the agents themselves. But we have a long way to go. And it is a challenge both from a business perspective and from a technology perspective. I would say that it's going to be probably late 2022 by the time the Apogee platform is available for Applied. And I don't know if it's only going to be available for Epic or it's going to be available for Epic and TAM. Don't know. It probably is going to be available for EasyLinks. EasyLinks was recently acquired by recently a year or so ago by Applied. So, but the agents themselves need to be educated as to the importance of their data. The vast majority of data that winds up in the insurance value chain, the vast amount of that data is created by agents. It's created by their people keying data, right? They're the ones who put together the submissions that go to the carriers or go into the carrier websites and type the information into the carrier systems, take the downloads. Their systems are a fabulous repository of data. And that's the only thing that insurance is. insurance is nothing but data. And unfortunately, the agents have, for the most part, signed over their ability to monetize this collective data. They've signed it over to their vendors. All those vendors have clauses in their contracts that say they have the right, once they've anonymized and aggregated the data, de-identified it and aggregated it, to take that data and do derivative works, to actually monetize it for themselves. The agents see no benefit from this at all.
The agents have a size disadvantage, well, and a technology disadvantage, right? So on one hand, you've got, I don't know, 30,000 agents,
Right.
A lot of whom are small or medium offices, and you've got 2 or 3 major players in the agency management system space, and who of course are tech people while the agents are not.
Right.
So are the agents waking up to that? Is that kind of what led to the creation of Be Atomic, and those kind of platforms that are telling the agents you should own the data that you're bringing into the system?
Well, I mean, certainly it's much more, they're much more aware today than they were 5 years ago, okay? But those agents all have trade associations. And those trade associations speak for agents in the aggregate.
So that's a Big I, PIA.
And the Council of Insurance Agents and Brokers,
Okay.
which is the trade association for the largest agents.
Oh, okay.
And so these organizations could at least begin the conversation to encourage the vendors to be a little more equitable in the way in which they treat their agents. And the startups and others, insurtechs, that want to help the agents become more digitally savvy, more digitally capable. So I know that the dialogue has started. I have written articles, I've made speeches, I've done everything that I can do. And I'm committed to the concept of opening up this environment so that, you know, the agents can at least decide for themselves who they want to use to enable them to deal more effectively with their clients, to represent their carrier partners more effectively. And, you know, I'm cautiously optimistic. There was a period of time where I thought it was pretty bleak, but the continual emergence of new technologies that are applicable to this space encourages me to believe that it's not going to go on forever, because you can't make those systems work without access to the data.
Okay. I run into people both in the carrier space and in the broker space, young insurance professionals who don't come from a tech background but have a tech interest, right? So they're working either as an agent or as an account manager, a CSR, or as an underwriter or claims adjuster or whatever, but they have a tech interest. So kind of like yourself, where you didn't come from a computer science background.
Right.
What advice would you have for them if they want to become more active on the tech side of insurance, but they don't come from the tech side? What should they get? One of the new Google certificates, or like how do you do it without going back to school and get a computer science degree?
Well, the most important thing that they have is a knowledge of the insurance ecosystem. I've worked with a lot of insurtechs. Some of them, a small proportion, come out of the insurance space, right? So they're insure tech.
It's becoming a little more common, but 3 or 4 years ago, it was very rare.
Most of them are little insurance, mostly tech, because the money was originally in fintech, right? When the fintech, you know, surge dropped off, the money still was looking for a place to go. And insurance on the surface looks like it's related to finance. It's not. It's an entirely different animal. But insurance is one of those things that touches every aspect of our lives, personal and professional, right? There isn't a technology, I'll make a bold statement, there isn't a technology in existence that could not be applied to an insurance use case. And those techs, those startups that are really, really smart and they get the most recent technology and they want to be in the insurance space because there's money there. There's a lot of money there. They're missing that ingredient that those young people you've just described have. They don't understand the domain. They don't understand the terminology. They don't understand the complexity of not the data in this space is not only, all pervasive. It's not only massive, it's massively complex. And so the people who really understand this domain, that's their value. And they could leverage that value with an insurtech tomorrow. And I mean, presumably the time to do this, to take a flyer, is when you're young, right? I mean, I'm crazy, so I did it in my 40s, but the value that they could bring is substantial. And there are so many venues today. I'm on the advisory board for InsurTech Hartford. I work with Stacy Brown and his team. I'm on the advisory board for Nassau Reimagine, which is another accelerator here in Hartford. I've worked with the folks from Global Insurance Accelerator. I've worked with the folks from BrokerTech Ventures. I was on a call today with a group that I'm not going to name right now, that is actually an insurance agency trade association that wants to set up their own, accelerator and venture fund, right? So there are enormous opportunities out there for those people who are digitally savvy, not necessarily programmers, but they really understand the insurance domain.
And I've got to add to that within the traditional insurance space, if you don't have 10 plus years of experience, you're a rookie. For an insurtech, 3 to 4 years of experience in a particular area of insurance. Exactly.
You're a god.
I have been amazed by that. In fact, I had it myself when I left American Modern in 2015, and I was looking for the next thing. I chatted with one early insurtech, and they wanted me to be their first commercial underwriter. And I tried to explain to them that I had 1 year of commercial underwriting experience, and they're like, "Yeah, that's better than much better than we have."
Right? Exactly. Exactly.
So great points there. So for the people like the ones that I've described, look at your local or regional insurtech association or conference or whatever, whether that's Hartford, Austin, LA, Silicon Valley, whatever. There's a whole bunch of them.
They're everywhere.
And those conferences are not that expensive either.
No.
So make it if you can. I'll be there for InsurTech Hartford Symposium coming up in April. And
it's April 26th and 27th.
Read Coverager. What else should they read? When people ask me, how do I, right? I'm a traditional insurance person. The insurtech space seems overwhelming. There's so many companies. The first thing I tell them is subscribe to the Coverager newsletter and start getting that feel. Number 2, listen to my podcast and the other podcast where we interview founders. How else can people learn about the just thousands of companies in insurtech?
If you just Google the term insurtech, you are going to get more links than you're ever going to be able to follow. It's amazing. I mean, Sheffy Ben Huda is a perfect example, right? So Sheffy came over here to work with the guys from CPAS, okay, who are now known as Bolt, right? And there's a great, see, nobody fails anymore. Not if you've got persistence, right? They pivot, right? So Sheffy worked for Eric Gewürztrammer, and I forget Ari's last name. But at any rate, she was one of their insurance experts. And she worked with them until they were threatened with lawsuits because they were trying to take their screen scraping technology that they had used to web enable green screens and use all the data that they had, all the information they had learned about all the underwriting questions that carriers had, and they were focused on BOP, and triage them and create a submission platform where agents would only have to answer all those questions one time. And it was really smart. If you answered a question that was a knockout question for one carrier, that carrier dropped off the list and all their questions went away, right? So you only, and they did a terrific job, but when they decided they were going to try to go into business for themselves to do that, they were threatened with lawsuits from the carriers. So they reinvented themselves as a wholesaler. They got themselves appointed with these same carriers, and then they could use their technology with agents, so agents could come to them using the technology. Absolutely brilliant. But in the intervening time there, Sheffy went to work for CNA. Didn't like the big company experience. And so she went out on her own. And I remember meeting with her when she was just beginning to launch Coverager. Before she'd ever written the first newsletter, I met with her for lunch in Brooklyn. My daughter and son-in-law live in Brooklyn. And we had the most exciting conversation. And she created Coverager from nothing because she was insatiable in her desire to learn everything there was about this space. And she has a real gift for turning over stones. She finds stuff out way before other people. So she's always on the leading edge. I haven't seen her in years and years, but I think she's fantastic. And you're doing a wonderful thing for those folks because they could not find a better source for their first introduction to what's InsurTech.
Yeah, I agreed. I had no idea. So I connected with her when she was a CNA. I didn't realize that she had a previous
Life.
a previous life and already in InsurTech. That makes a ton of sense.
Yeah. I mean,
but yeah, it's amazing what she's built.
Yeah, back when I came up, we called it insurance technology. We weren't in a hurry. We didn't have to put the words together, right? So, but we've had this forever. It's like I listen to people talk about APIs today as if this is a new thing. APIs have always existed. They were the method by which you connected systems. You wrote an application programmer's interface, not magic. The languages may have changed, but it's essentially the same logic. And the opportunity for young people in our space, because I think the average age in the insurance industry, not InsurTech, but in the insurance industry is about 57 years of age. 57. Okay, now that's baby food for me because I'm 72, but those folks are not going to be around that long. They're gonna head on. And so there are terrific opportunities. I mean, this world is changing so fast. We have spent hundreds of years as an industry driving by looking in the rear view mirror. That's what actuarial science, and I'll put it in quotes, is all about. It's driving by looking in the rearview mirror. Today, when there are, I think, 3 sensors for every living human being in operation on our planet, we are capable of measuring everything we want to know about everybody and anything. And I see a sea change coming where our industry, which was built on the law of large numbers, demographic groups, you slot people in, doesn't matter what their behavior is. They happen to be a 25-year-old unmarried male, okay? And their auto insurance is going to cost a lot more than my auto insurance as a 72-year-old, married grandfather, right? But I'm here to tell you there's probably plenty of 25-year-old males unmarried who are better drivers than me, right? When I put that telematics device in my car, my behavior changed. And this is the value of risk mitigating technology. Number one, The customers love it because it makes them safer. Okay. Number two, it changes their behavior to make them even safer. Number three, it allows us to underwrite and price on the basis of somebody's actual behavior, which customers love. Nobody wants to hear that I can't get a cheap auto insurance policy because I have a bad credit rating, right? What does my credit rating have to do with my auto insurance? But that's a primary factor being used by actuaries to price the auto insurance product. But and it's not just personal lines, it's commercial lines. Buildings are getting smarter, vehicles are getting smarter, and in general, human beings are getting smarter, right? Because we're starting to wear those wearable devices, a workplace safety, MakeYouSafe as an example, one of the startups that I work with. MakeYouSafe has a terrific device that allows you, the underwriters for workers' comp, to know with absolute surety how safe their workplaces are that they're trying to insure. In fact, it even has a recording device which allows the worker to tell the management immediately that they had a near miss. Okay, they almost had an accident, which nobody picks up, right? But it's the best indicator of you've got a safety issue on your work floor. I mean, that's the way we ought to be, selling insurance. We ought to be selling it the old-fashioned way, where we send in engineers or loss control specialists, only we don't have to send in people anymore. we sell them devices that will measure what it is that's happening in those workplace environments, in those warehouses, in all the environments that we insure today blindly. My number one pet peeve is cyber liability insurance. It is underwritten in the most archaic and moronic way imaginable. We're now at a court up to 150 self-reported questions, answers to questions on these cyber liability applications, right? There's supplements that you have to get in order to get all 150. You know what the value of a self-reported, answer is? It's got no probative value with respect to underwriting the risk, none at all. It is useful if you want to deny the claim later, though, if you can prove that they didn't tell the truth. You want to know if somebody's safe from a cyber liability perspective? Get an audit from a cyber security firm, right? There are organizations like the Coalition that are really cybersecurity firms that happen to sell a cyber policy as a result to their customers who pass their audit, right? That's how you underwrite a risk. And, today it's possible with all of this great technology that we've got. But as long as actuaries are threatened by data science because they think it's going to put them out of a job, as long as we drive looking in the rearview mirror instead of out through the windshield, we're never going to get to that future. Or, well, I shouldn't say never. We're not going to get there as quickly and as profitably as we might.
It does seem like the actuaries are at least at the several actuarial conferences I was going to a year just before COVID. It seemed that they were at least starting to grapple with the fact that data science is here to stay, right? And how to integrate very forward-looking data science with completely backward look. And that's a bad way to put it, but completely based on the past of what's already happened, right. Actuarial. And so I do think that they're making inroads. But yeah,
I know some actuaries who are looking forward. But even when they are, their organizations are not. And, I always counsel my startups, don't immediately assume you're going to be able to disrupt this marketplace, okay? It is entrenched and it is sticky, okay? And it's much more complicated than you think it is. You're far better off enabling incumbents than trying to disrupt them. Disruption is a very difficult thing to accomplish. So I want enablement to happen, but I don't want my startups to get stonewalled by the companies that are giving them proofs of concept, as an example, right? A company will shell out $50,000 for a proof of concept to a startup, and that startup will probably spend more than that $50,000 trying to impress that company because they think they're going to get a customer at the end of that process. And it happens so infrequently, it's not even worth talking about. As long as proofs of concept are an end in their own right, as long as they're just something you do so that you can put it on your annual report, it's meaningless. We have to really honestly and forthrightly deal with one another. Carriers should be posting somewhere, here are the needs that we have for insurance technology. What they should be posting somewhere what their weak points are, so that people who are running accelerators could match them up with somebody that they know. You know, the startups only have so much gas, right, in their engine. They can't go to every accelerator everywhere. So I've got carriers right down the street here in Hartford who may not know about somebody in Austin, right? But that somebody in Austin may have the perfect solution for that carrier's biggest problem. Unless you let people know what your challenges are and you know, publish them, you're not going to be able to get a good, you know, connection with a startup that can solve them.
Interesting. Interesting. Are there specific carriers that are better at this, better at truly going beyond proof of concept and and actually sincerely trying to implement?
Sure, there are. Nassau Re, now called NASA Financial Services, owns Phoenix Life, which it's a legacy company, but they, when the Hartford InsurTech Hub cratered and Startup Bootcamp pulled out, they started their own. Now, they didn't have a lot of money to give people, right? But they gave them space. They have a beautiful building in downtown Hartford, the boat building, and people were enabled to be in Hartford very inexpensively. And they made available their own people, and they opened up the kimono and told their startups, here's what we need, right? And they made themselves guinea pigs. That's huge. I think Mass Mutual up the road, these happen to be both life companies, but Mass Mutual up the road is one of the most successful internal incubators, and they've spun off multiple startups which they didn't kill at birth. Right? Travelers just bought Trove. Really interesting. I happen to know the founder of Trove, met him at Plug and Play, or no, it was Silicon Valley InsurTech Accelerator years and years and years ago. And he's pivoted so many times, he makes me dizzy. But, you know, that Travelers just bought them. And this is as digital as you get. So it's pretty interesting. I can't wait to see what they do with it. And I have to believe they must have done a lot of research before they made that decision. You know, I connected the Hartford with MakeYouSafe, right? And MakeYouSafe was actually already connected with them, but they were connected with the wrong group within the Hartford. They were with the group from 3 to 5 years. There's no insurtech in the world that wants to talk to somebody who's interested in them 3 to 5 years. I got news for you.
Yeah, they'll run out of money
Right.
before that. Yeah,
long before that. So I connected them with the people that I know and who are responsible for present data up to 3 years. And they were also pitching an underwriting improvement, right? Well, it'll be a decade before underwriters of workers' compensation agree to take into consideration all the data that's available on a wearable device on the workshop floor, right? But they're collecting really important data that the claims department would kill to have. And I said to them, look, nobody pays attention to claims. They'll be thrilled to talk to anybody. So hooked them up. The friend of mine, Jim Rogers at the Hartford, hooked them up with the claims department. I don't know where it's gone, but they've got a much better chance of enabling themselves. So, I mean, there are so many opportunities for connections, and this is what I spend my life doing, right? In addition to advising my startups on their own development, decisions, product decisions, hiring decisions, funding decisions, I'm looking for connections everywhere I can. And I make myself available. I work gratis for the most part with all my client companies where I have equity. I don't charge them anything. And, with all of my other mentorship, activities, I'm in contact with thousands of people. And I also have all my contacts, not all of them, some of them are gone, from decades ago. And so I can't be more than 1 degree of separation removed from anybody in the insurance technology space. And so my mission at my age, I don't need more money, okay? I mean, you can always use more money, but what I want is an opportunity to pass on what I know. I want to be able to help people who are trying to make a difference in this industry. And I want more than anything for the industry to become its best self. I know that insurance is an undeniable social good. We have lost that message with the public. Most people believe it's
Horribly
forced to you.
Horribly.
And so I speak the truth about insurance every place I go. And, I would be very willing and anxious to talk to any of your listeners. So, you can find me on LinkedIn, Frank Sentner. My contact information is in the more. If you go into the contact information, LinkedIn sort of makes you discover, but both my email address and my phone number are in there. Anybody who wants to get to me, I will accept, connection requests from literally anybody.
Fantastic, Frank. Thank you so much. To the listeners, just like you called me for career advice, don't ignore the opportunity to talk with Frank to get some historical perspective and where the industry might be going in the future. Thank you so much for your time. This has been super interesting. And I look forward to seeing you at InsurTech Hartford Symposium.
Yes. Thank you, Tony.
Thank you.